highlighting Massachusetts, Connecticut, Washington, and Washington, D.C. paid family leave developments. This session is part of Seyfarth Shaw's Guidance on State and Local Paid Family Leave Laws webinar series. At this time, all participants are in a listen-only mode. For those of you who are logged into the web presentation, you are encouraged to submit questions throughout the conference by typing them into the Q&A box on the right-hand side of your screen. For those interested in obtaining CLE credit for this webinar, an attendance verification code will be read during the presentation that will be required on the CLE attendance affirmation form. Please write this code down as it will not be reread and is required for CLE credit. Copies of the webinar recording and materials, along with the CLE attendance form, will be distributed to attendees in the days following the session. On the next slide, you will see a legal disclaimer. And at this time, I would like to turn it over to Josh Seidman. Josh, please go ahead.
All right, thank you, Kelly. Good morning, good afternoon, everyone. Thank you so much for joining us for today's webinar. It's the first part of our multi-part series on paid family leave laws around the country. We're going to be focusing today's presentation on 4 of the most timely, most relevant paid family leave laws that are around the country, and those are Massachusetts law, the law in Connecticut, the law in Washington, D.C., and the law in Washington State. We have a great team of speakers joining us today to bring you this information. I'm joined by my colleagues, Chrissy Costantino, Christina Duslack, Molly Mooney, and Renata Walker. All 5 of us spend a lot of time counseling clients around the country on compliance with paid family leave laws, their nuances, their inner workings. My name, by the way, is Joshua Seidman. So thankful for you all to be joining us today. And as you'll see on the next slide, we have a really jam-packed agenda for you. So we're going to be starting our discussion today with a quick overview of what the nationwide paid family leave landscape looks like, followed by a few minutes on the federal paid family leave landscape, some proposals, and also the status of the federal Families First Coronavirus Response Act and where we foresee that mandate heading in the next several weeks. We'll then turn our attention over to the state-specific laws, starting with Massachusetts. Molly will be covering that one. Connecticut, Christina will be covering Connecticut's paid family leave program. And then Chrissy and Renata will be rounding off our presentation with a digest of what's been going on in Washington, D.C. and Washington State since those 2 programs went live back in 2020. So as you'll see on the next couple of slides, we're going to start us off with our nationwide paid family leave overview. Not to play too much of a spoiler, but during this section, there's going to be a very quick, easy polling question. There's no right or wrong answers, really just to give us a sense of which of our big 4 laws that we're focusing on today are most relevant to you all in attendance so we can help tailor portions of our discussion accordingly. You'll see a pop-up on the right side of your screen. Very easy. I'll read the choices for you. So we'll be heading that way in just a couple of minutes. But for starters, as you can see on this slide, there are 11 total paid family leave laws around the country. At the federal level, the FFCRA expired at the end of last month. That's not included in the head count today. At the state level, we have 9 states plus Washington, D.C. with paid family or paid family medical leave laws. Those are California, New Jersey, Rhode Island, New York, Washington State, Washington, D.C., Massachusetts, Connecticut, Oregon, and Colorado. And then finally, we have 1 municipal mandate that's relevant to the family leave landscape, and that is in San Francisco, where there's a paid parental leave ordinance that essentially tacks on to the state's paid family leave law for bonding-related absences. A few thoughts before we move on. Number 1, the first 4 states listed in that state bullet point, California, New Jersey, Rhode Island, New York, I like to think of those as the true paid family leave laws as opposed to a paid family medical leave law. The difference is those 4 laws allow employees to receive wage replacement benefits for care of a family member with a serious health condition, bonding with a new child, among other reasons, but not for the employee's own serious health condition. For that, employees in those states need to turn to the state's statutory disability benefit program. By comparison, the 4 states we're focusing on today and the newest ones that are out there in Oregon and Colorado just was enacted a couple of months ago in November. Those 6 all combine their paid family and paid medical leave absences into a single program. So the employee can receive their wage replacement benefits, again, under that same singular program based off of their relevant need for either family member serious health, bonding, their own serious health, and other reasons, as you'll hear, whereas there are separate, although interrelated programs in California, New Jersey, Rhode Island, and New York. Finally, just to note that we're not going to be focusing on Oregon and Colorado today, although those are two very important laws. They'll be part of the focus of the next segment in our paid family leave webinar series. Just at a high level, the Oregon benefits are scheduled to go live on January 1st, 2023 to eligible employees, with payroll deductions to fund the program beginning a year earlier, so January 1st of 2022. Colorado's a year behind Oregon, so the payroll deductions to fund that program are set to begin 1/1/2023, with the benefits then becoming available 1/1/2024 as things stand. Next slide, please. So here is our polling question. You can see the choices here. So just again, no right or wrong answers. In which of these locations does your company or organization have employees? Massachusetts only, Connecticut only, Washington, D.C. only, Washington State only, at least 2 of those 4, or at least 3 of those 4. So you have a chance now to select your choice. And let's see, we'll just give it another second. And this is, again, really helpful for us as we plan the next 50 minutes or so of our segment, so we have a sense of which of these laws are most relevant. And that's great. It's what we were hoping to see. So it looks like the overwhelming majority of you, 61% of those of you who responded, and thanks for everyone who did, have operations in at least 3 of the 4, and perhaps all 4 of these relevant locations. That's really good to know. Thanks. So as you'll see on the next 2 slides, we're going to spend a couple of minutes here going over the federal landscape for paid family leave. FFCRA, I mentioned already that it sunset a little under a month ago. The one portion that did not sunset, so the mandates of the FFCRA, those being the expanded family medical leave mandate and the emergency sick time mandate, those both sunset at the end of last year. The tax credit portion of the FFCRA, right, that would reimburse employers who were covered and paid employees for either their sick time or their family medical leave under this act. Now, if employers voluntarily continue to provide that pay to their employees, and that's only employers who were covered by the mandate originally, those employers are still entitled to the tax credit reimbursement through the end of the first quarter of this year. Very importantly, the FFCRA, as it stood, only applied to private employers with fewer than 500 employees. Some other wrinkles with employer coverage, but that was the main hook. And it, as a result, didn't cover a lot of employers around the country. You can see the amount of time off benefits that were provided: 80 hours of sick time, 10 days of unpaid FML, although you can use the emergency sick time during that period, followed by the 10 weeks of paid time off there as well. The expanded family medical leave portion of this act was not a paid version of the federal FMLA. There was no pay for bonding, no pay for family member serious health. The only pay that was available under that part of the FFCRA was for an employee who was absent to care for their child whose school or place of care was closed due to COVID. So it had some narrow limitations to what it was actually available for if the employer was covered. As you'll see on the next slide, the FFCRA has been gaining a lot of attention the last few weeks following the Biden administration's release of a proposal to reenact it. All we've seen is a high-level sort of 2-page proposal right now as part of a larger plan to attack the pandemic. The no legislation yet, but the proposal details, I wanted to point out just one of them for you all to be aware of, and that is that second sub-bullet point under the details bullet point here, which is it could, as it stands today, eliminate the exemption, right? This proposal would eliminate the exemption for employers who have 500 or more employees. As a result, if this gets reenacted, the benefits could be, employers with any number of employees across the country would be obligated to provide that that COVID-related sick time or expanded family medical leave under the FFCRA. That would be at least through the end of September of this year. The tax credits would only be available for the employers with under 500 employees, again, based on the high-level details of this proposal. Worth paying attention to, and if it ends up being that employers are covered, of all sizes, are covered by this reenacted FFCRA, understanding how your programs, PTO, sick time, maybe you've offered COVID-related paid sick benefits to your employees, how those interrelate with the FFCRA mandate will be very important for employers. So keep an eye out on that in the coming weeks. Next slide, please. And the final slide for me in this segment is just a quick rundown of federal paid family leave proposals. You can see the Family Act at the top here, S463 HR 1185, is the most prominent of these three. It's the one that's gaining the most attention. It has the most support from Democrats, both in Congress and the government and the presidency as well, the administration as well. Given the makeup of the administration and of Congress, this is the one to pay the most attention to, and it's also the one that's the most similar to the state programs you'll be hearing about for the rest of our segment today. It would be 12 weeks of paid family medical leave for all covered reasons under the FMLA. It would be funded jointly through a payroll tax funded by employers and employees. And it would give a cap on maximum benefits to workers. I think it'd be 2/3 of their pay, capped at $4,000 a month is how it stands today. So similar sort of setup. I've been hearing that it's going to get reintroduced into the next session of Congress any day now, any week now, and we'll see where it heads from there. Very quickly, the New Parents Act is a little bit different. It provides leave, but it would provide leave, but only for bonding of 1, 2, or 3 months, and it would fund that leave through an advancement of the employee's Social Security benefits. By comparison, the Advancing Support for Working Families Act that has also been introduced in prior sessions isn't a leave entitlement at all, wouldn't provide any leave or time off. What it would do instead is provide the new parent for birth or adoption of the new child with an advance of their child tax credits, up to $5,000 for that new child. So that's how the federal proposal landscape looks on paid family leave. Again, pay attention to the Family Act, in news and hearing reports coming out of Congress in the coming weeks. So with all that being said, I'm going to turn it over now to Molly to start us off with the Massachusetts paid family leave portion of our discussion today.
Great. Thank you so much, Josh. So as Josh mentioned, we have a lot to cover today, so we're going to jump right in. Next slide. Next slide. So before we sort of jump into the updates that we have on Massachusetts, benefits became available on January 1st, 2021. So we do have a lot of new information to share. But I wanted to give a general overview of what Massachusetts paid family medical leave offers and requires of employees for benefit eligibility, just for those who may not be as familiar with Massachusetts paid family medical leave. So as you can see, employees in Massachusetts can now take up to 20 weeks of job-protected medical leave to care for their own serious health condition, and they can take up to 12 weeks of job-protected family leave. Now, they can take family leave for a number of reasons. You can see them all on the slide, and I want to highlight the first two. So they can take leave to care for a family member with a serious health condition, but that leave is not available until July 1st. Everything else on this slide, all of the other reasons, are available as of January 1, but that's the one category of leave that's not available until July 1. They can also take bonding leave to care for a new child after birth, adoption, or placement, and they can take that bonding leave anytime within 12 months of the birth, placement, or adoption of that child. Just a quick note, employees can only take an aggregate of 26 weeks of paid leave in a benefit year. So they're eligible for 20 of medical, 12 of family, but it's capped out at 26. Next slide. Okay, so who is actually required to provide paid family medical leave and what employees are eligible? So unlike federal FMLA, Massachusetts paid family medical leave applies to employers with 1 or more employees in Massachusetts. So this pretty much applies to any employer with any employees in Massachusetts, and that includes out-of-state employers who may have employees that are working remotely in Massachusetts. Now, employees who are eligible to take leave are all Massachusetts employees, and that means part-time, temporary, seasonal, even former employees, and that's a little bit different. That former employees are actually entitled to paid family medical leave in Massachusetts as well. Now, unlike the federal FMLA, there's no service requirement for Massachusetts PFML. There is, however, a financial eligibility requirement. So an employee has to have earned at least $5,400 and at least 30 times what their calculated weekly paid benefit would be in the last 4 quarters. And that number there, 5,400, that's being updated. It's based on the unemployment guidance in Massachusetts. Next slide. Okay, so the maximum benefit amount as of right now is $850 a week, and that number is going to be adjusted annually. So right now we're at $850 a week. And there's also a 7-day waiting period. So if an employee applies for benefits, they have a 7-day waiting period where they will not receive paid benefits from the state, but that 7 days does count against their PFML allotment. Though that 7-day waiting period is also job protected. So employees can take vacation time during that 7-day waiting period. They can take sick time. They can take whatever accrued leave they have available to them, but they will not be getting PFML benefits during that waiting period. Next slide. Okay, one final point on Massachusetts PFML. So employers can enact a private paid family medical leave plan and exempt themselves either from medical leave or family leave or both. And they will be exempt from remitting contributions, and they'll essentially have their own private plan. Those applications can be submitted through the Department of Family and Medical Leave, and they're accepted quarterly. Or employers can choose to participate in, which means they're responsible for remitting contributions on behalf of their employees, and their employees will be eligible to participate in the public plan. Next slide. Okay, as I mentioned, we've gotten a lot of guidance and updates over the last month or two as benefits have rolled out. Next slide. And the most important of those relates to intermittent leave. So take a step back. Employees can take intermittent leave under Massachusetts paid family medical leave, and they can take it for these following reasons. So to care for their own health condition, and also to care for a family member with a serious health condition, which again is not effective until July 1. Now, with respect to bonding leave, employers do not have to allow employees to take intermittent leave for bonding unless both the employer and the employee mutually agree. So that's one category of leave where employers don't necessarily have to allow the employee to take intermittent leave. Next slide. Now, the guidance that we've gotten in January from the department on intermittent leave relates to the increments that employers can allow employees to take their leave in. So the DFML clarified that employees can take intermittent leave in increments between 15 and 60 minutes. So 1 hour is the maximum increment that employers can allow employees to take intermittent leave in. So the minimum increment is 15 minutes, and the department will default to 15 minutes if the employer does not have a minimum increment set. But employers should keep in mind that the regulations state that the minimum increment should be the same as what the employer uses for other forms of leave. So for example, federal FMLA. So if you allow employees to use FMLA in 1 hour increments, then you're going to want to use that same increment for Massachusetts paid family medical leave. Next slide. Now, I also want to highlight a recent update we got late in the fall of last year, and it has to do with the anti-retaliation provision of the regulations for paid family medical leave, because this was a big deal when the regulations first came out, and employers were pretty worried about this. So originally, under the prior regulations, they stated that, quote, any negative change to an employee's terms and conditions of employment within 6 months of their return from leave would be presumed to be based on their use of leave. So that's a pretty strict retaliation presumption. And in the final regulations, the department clarified that certain things will not be considered a negative change. So for example, trivial or subjectively perceived inconveniences that affect de minimis aspects of an employee's work, those things are not a negative change that will be presumed to have been based on the employee's use of leave. Next slide. Now, finally, I wanted to note this. It does not apply to most of you, so I'm just going to cover it really quickly. But the Department of Family and Medical Leave issued emergency regulations in December, and it relates to employees of acute care hospitals. So just quickly, that's a specific type of hospital that's defined under Massachusetts law. If any of you are an acute care hospital, I'm sure that you know that. But the emergency regulations essentially provide that for employees that had had a child or an adoption placement in 2020, they're eligible for 12 weeks of bonding leave within 12 months of the birth or placement of that child. So that means if someone gave birth in August, they are entitled to 12 weeks of bonding leave in 2021 up till whatever the date in August of 2021. So what the DFML said is, given the current state of the healthcare system, particularly care hospitals with COVID-19, employers can consider extending the period that those healthcare workers would be entitled to take their bonding leave through December 31st, 2021. Now, important to note, they don't have to do this, but they can. Next slide. Okay, next slide. So now we're going to move on to the topic that we are getting the most questions on, as benefits are now available and employers are trying to figure out, okay, what does PFML run concurrently with? What's going on? What other types of leave can employees take at the same time? So there's a lot going on here. So we're going to sort of just jump right in. Now, PFML benefits, whether the employee is using them through the state or a private plan, they are going to run concurrently with other types of leave that is being used for a PFML qualifying reason. So it will run concurrently with FMLA, Massachusetts parental leave, sick leave, vacation, PTO, STD, LTD, etc. The time taken that an employee uses for a PFML qualifying reason will again run concurrently with the PFML benefits they'd be eligible to receive, but the employer's policies must specifically state that they will run concurrently. Now, on this topic, we recently got an update from the DFML on reimbursements. So essentially, if an employer has a paid family medical leave policy or a disability policy, but they also are part of the public plan, if an employee chooses to use the employer provided benefit and not apply for PFML benefits with the state, essentially they're using the company provided benefit, but they have this other pool of benefits that they'd be eligible to use if they wanted to apply for it, but they don't. In that instance, employers can actually apply for a reimbursement from the state for those benefits that the employee would have been eligible to receive. They're not going to be reimbursed if the employee does apply for benefits and gets them. But if they don't, they're eligible for that reimbursement. And this is sort of an area that we're learning more information on, and the department has clarified that they're going to be releasing additional information on this. So we need to be a little bit patient there just because it's still so new. Next slide. Okay, now this is the question we get the most. So the regulations for Massachusetts paid family leave separate the types of leave that employees can use at the same time with PFML. So first we have employer provided leave like disability, family, or medical leave programs. And on the other hand, we have what the regulations call accrued leave. So that's vacation, sick time, personal time, PTO. So we have company sponsored leave programs and we have accrued leave. So I'm going to first talk about the employer sponsored disability and family and medical leave programs. So employees can collect employer provided leave and PFML benefits from the state at the same time. But for example, if a company has a paid parental leave program that gives employees 60% of their pay, that employee can apply for benefits with the state and they will be cut off at 100% of their pay. So they can essentially get 60% from their employer and then make up the other 40% with PFML benefits from the state. So they're always going to be cut off at 100% of their wage. They're not going to get more than 100%, but they can take those types of leaves simultaneously. Now, the state is always going to deduct from PFML benefits anything that the employee gets from unemployment, Social Security, or workers' compensation. Those will always be offset. Next slide. But the department and the regulations accrued paid leave like sick time, vacation, personal time differently. Now, this is important. An employee can choose to take vacation or sick time instead of PFML, but they cannot take them both at the same time. So an employee can't apply for PFML benefits with the state and then use their accrued vacation time to top off their pay to 100%. They can do that under company-sponsored leave programs, but they can't do that with their vacation. And I saw a question come in about whether employers can sort of force employees to use vacation time in addition to their PFML. They cannot. Employees can choose to use it, but they also can't add vacation if they choose to get their benefits through the state. Next slide. Okay, next slide. So now, as benefits have come into effect, we're getting a lot of questions about employees who took leave in 2020 or are planning to take leave in 2021. Now, the regulations provide that an employee's weekly benefit amount is not going to be reduced it's going to be reduced by any leave that that employee took for a qualifying reason in the 12-month period prior to this new leave. But we are in a really unique situation now with the transition from 2020 to 2021, where we're essentially treating 2021 as a blank slate. So what that means is if an employee took a PFML qualifying leave in 2020, that is not going to count against them for leave taken in 2021. Next slide. So to give you an example of this, if an employee had a child in April 2nd, 2020, they are eligible to take 12 weeks of bonding leave in 2021 up until April 2nd, 2021. Doesn't matter if they leave in 2020, they're eligible for those 12 weeks as of January 1. So another similar situation. If an employee gave birth on December 2nd, 2020, has complications, took leave during the month of December, as of January 1, fresh slate. They're entitled to up to 20 weeks of medical leave and up to 12 weeks of family leave, again, capped at 26 weeks total. Next slide. One other thing we wanted to quickly note is that we did recently get some guidance from the Department of Family and Medical Leave that if an employee applies for benefits relating to COVID-19, if they have a certification from their healthcare provider stating that COVID-19 is a serious health condition that they need leave for, they will be entitled to take medical leave related to COVID-19. Next slide. Finally, we want to remind employers that we're really recommending that if you have Massachusetts employees, that you update your handbooks and policies to reflect that employees are now eligible for paid family medical leave in Massachusetts. So even if you're participating in the public plan, we recommend having a Massachusetts paid family medical leave policy in your handbook, standalone policy, whatever it is that you want to implement. And we also recommend updating your language to state that Massachusetts paid family leave is going to run concurrently with other types of leave that you provide. Next slide. Next slide. So finally, before I hand it over to Christina, as I mentioned, benefits are now available. So there is a ton of information on the Department of Family and Medical Leave website about how employees can apply for benefits and also about how employers can set up an account in order to see applications for benefits that come through. Just a quick reminder, employees have to inform the employer if they're planning on applying for benefits. So you're going to know, but then you're also going to be able to set up your own account to be able to see those applications come. And that's it for Massachusetts. So I'm going to pass it over to Christina. Thank you.
Thanks, Molly. All right, next slide. So the Connecticut Paid Family and Medical Leave Law creates a new paid leave program, but then it also amends the state's Family Medical Leave Law, which is an existing unpaid family medical leave law. The changes to the Connecticut FMLA law will go into effect January 1st, 2022. And the way that these two laws will work is they're designed to run concurrently. So when used for reasons covered by both laws, they'll run concurrently, and then also where the employee has a time available under both laws. However, it's important to note there are certain situations, including different employee eligibility requirements, where this might not be the case. So in these situations, an employee could be eligible and entitled to benefits under one law, but not the other law. The other thing to highlight is that the Connecticut Paid Family and Medical Leave law do not provide job protection. that job protection will come from either the state FMLA law or the federal FMLA law. So the law also establishes the Paid Family and Medical Leave Insurance Authority to administer the Connecticut PFML. And so we actually expect that they'll be releasing additional regulations and administrative guidance in the coming months. So we're going to review some of the key points of the law, but then note that we're going to be expecting additional information throughout 2021. And you can see here that I provided some of the key dates. So employee premium withholdings have started as of January 1st, 2021. And then you'll see benefits will be available January 1st, 2022. Next slide. So for employee coverage, most Connecticut employees will be subject to the PFML. The standard is that the employer employs one or more employees. And there's very narrow exclusions. Those exclusions include the federal government, the state or municipality, a local or a regional board of education, or a non-public elementary or secondary school. So really it's going to be most employers with employees in the state. In Connecticut, if you're issuing a W-2 for an employee, they are likely going to qualify as an employee under the law. And this is actually even if you don't have an employment uninsurance obligation for that employee. However, the authority has indicated that if you do have an unemployment insurance, and if you are paying unemployment insurance for that employee, it's evidence that they work in Connecticut. So it's a little bit, so if you are paying for, if you are issuing a W-2 to an employee in Connecticut and you don't have an unemployment insurance obligation, you might want to check with your attorney just to make sure whether or not they're covered. Next slide, please. Okay, and then actually one more thing to note too is that under the Connecticut FMLA law, the standard is actually going to be for employee will be the same as the PFML. So those two will line up, and it will be every employer who has one or more employees. Okay, so then for employee eligibility, the employee has to meet two standards. They have to earn at least $2,325 during the employee's highest earning quarter within the base period. So that base period is the first 4 of the 5 most recently completed quarters. This is a common standard in a lot of the paid family medical leave laws. And then the employee also has to meet one of these other conditions. They either have to be presently employed, they have to be employed with the employer within the previous 12 months. So this applies to former employees for up to a certain amount of time. Or they have to be self-employed, a Connecticut resident, and enrolled in the Connecticut PFML. Now, under the CFMLA, you'll see that the current requirement is an employee has to be employed for 12 months and have completed 1,000 hours of service. So the changes in the law as of January 1st, 2022, this will change. There'll be no hours requirement. And then it'll just be that an employee has to have worked at least 3 months. Now, this is one of the areas where you'll see an employee might be eligible for the PFML, but not the Connecticut Family and Medical Leave Act, because there's no length of service requirement for the PFML and no hours requirement. Next slide, please. So the reasons for use are pretty broad. And you can see here, a number of them kind of align already with the federal FMLA, and actually the first 6 are the same as the current Connecticut Family Medical Leave Act. The one difference is safe time absences that are related to family violence. That is not found in the PFML law. And actually, one of the other things that will be changing on January 1st, 2022, is that the definition of who's included as a family member will expand. So currently, under the state's FMLA law, it only includes a spouse, a son or daughter, or a parent. And if we can go to the next slide, you can see in bold, these are going to be the different relationships that will be added. So this is going to make the reasons for use a lot broader and who's going to be the covered family member. A couple of other notes is that a child, as of January 1st, 2022, there won't be an age limit in the definition of a child. And then also a parent will add some additional categories. So it includes a biological parent, a foster parent, adoptive parent, a step parent, but then they've also added a parent-in-law. And then also an individual who stands in loco parentis to the eligible employee when the employee was a child. You'll also see that sibling means a brother or sister related to a person by blood, marriage, or adoption by a parent of the person. So again, this is going to cover a lot of people. Next slide, please. So the way this program is funded is through an employee payroll deduction. Employers do not contribute to the program. However, employees are required to deduct and withhold contributions from the employees. So if you're not keeping up with these deductions, you could be on the line for them. So it's really important to make sure that you're deducting these contributions from your employees. The amount of the deduction will not exceed 0.5% of the employee's earnings that are subject to Social Security. Now, basically these deductions started January 1st, 2021. So if you haven't started these deductions yet, there is an opportunity to catch up. So for the first 2 quarters of 2021, an employer may deduct additional amounts up to 1% from the employees to catch up for missed deductions. And then after that, you'll need permission from the labor commissioner. So the wages that will be included in these deductions are gross earnings from the employer, salary or hourly wages, vacation pay, holiday pay. It's basically the same calculation for determining total wages as they're used to calculate FICA. And then the other thing to note is that employers should consider reconciling the contributions made in previous quarters before making a final contribution at the end of the year. Next slide. So the amount of pay, this is a wage replacement benefit, and it's tied to the state's minimum wage. Now, there was a law passed that will basically increase the minimum wage for basically up to $15 an hour by 2023. So the current minimum wage is $12 an hour, and that will go up to $15 an hour as of June 1st, 2023. So you can expect in 2022 that the amount of benefits will be capped between $780 and $840 per week. And then as of June 1st, 2023, the benefits will be capped at approximately $900 per week. And so the way that an employee's benefit is determined is through their base weekly earnings. So basically, you take what they're earning in 2 quarters in the base period where they earn the highest total wages, divide by 26, and then you round down to the next lower dollar. And then you can see here that there's basically a formula that caps it at 60 times the minimum wage, but then if an employee is earning less than or equal to 40 times the Connecticut minimum wage, they're going to be receiving 95% of their base weekly earnings. And then if they're earning greater than 40 times the Connecticut minimum wage, then they're going to be getting 60% of the base minimum wage, and that's capped again at 60 times the state minimum wage. The other thing to note about the program is that employees can supplement the benefits they receive from the state with other forms of paid time off up to 100% of the employee's pay. The employee, however, cannot receive workers' comp, unemployment compensation, or any other state or federal benefit when they're receiving this wage replacement. An employer also may require, or they can have a policy that allows employees to choose to substitute accrued paid leave for any part of the 12-week period, as long as employees are allowed to retain at least 2 weeks of leave in their leave banks. And, the bill does not require an employer to provide paid sick leave or paid medical leave in any situation in which the employer would not normally provide such leave. And then if an employer provides paid leave for fewer than 12 work weeks, the additional weeks of leave necessary to attain the 12 work weeks of leave required may be provided without compensation or by using the leave benefit through the PFML law. Next slide, please. So as of January 1st, 2022, employees will be eligible to receive 12 weeks of paid family and medical leave benefits in a 12-month period, plus an additional 2 weeks of benefits for a serious health condition resulting from incapacitation that occurs during pregnancy. And then also, as of January 1st, the Connecticut FMLA requirements will actually line up with the PFML. So it currently is 16 weeks in a 24-month period. That will change to 12 weeks in a 12-month period, plus the additional 2 weeks related to pregnancy. Next slide, please. So we've been talking about the state program. However, employers can apply for a private plan exemption. Applications are accepted on a rolling basis, and they have to be approved within 30 days before the end of the quarter in which the plan goes into effect. And then the one thing that is unique about this law is that employees have to vote on the plan, and they'd have to get majority approval. So that's kind of a different than some of the other laws. And then the private plan has to confer all the same rights, protections, and benefits that an employee would receive under the state program. Next slide, please. So intermittent leave is also available under the PFML and the CFMLA. For a serious health condition, it's permitted when medically necessary, and employees can satisfy employees have to satisfy all the notice and certification requirements when they're using this type of leave. The other thing that's interesting is that an employer can temporarily transfer employees to available, basically to an available alternative position with equivalent pay and benefits that better accommodates them, and it's only for certain types of leave though. So serious health condition of the employee or their family member, and organ and bone marrow donation. You'll also see here that similar to Massachusetts, that bonding leave can only be on an intermittent basis with employer consent. Next slide, please. And then finally, the notice requirements. So the notice requirement doesn't begin until July 1st, 2022. And there'll be specific topics that need to be covered, including entitlement to family medical leave, the opportunity to file a claim, the right to file a complaint with the labor commissioner, and then that retaliation by an employer against an employee for requesting or applying for family and medical leave is prohibited. There are no posting requirements, but the Connecticut Paid Leave Authority encourages employers to share. They have a fact sheet that's available on connecticutpaidleave.org that you can find on the employee page, and they encourage employers to share that with their employees. Now, there's no policy requirement, but we do recommend it, and we recommend having it in place before benefits go into effect. The other key obligation is that employers should register their company at connecticutpaidleave.org, and they should do so now. And, you know, if you have a payroll provider or a tax preparer who handles a lot of this stuff for you, you want to coordinate with them and make sure that your account is all set up and that you're in compliance. And then finally, remitting contributions to the state. So employers are responsible for remitting contributions to the state each quarter. So for the first quarter only, there's a 1-month grace period. So normally you would be submitting contributions by March 31st. So for this year and this first quarter only, you have until April 30th, 2021. And then for the rest of the year, contributions are due June 30th, September 30th, and December 31st, and they can actually be paid through the website portal. So that's all I have. Thank you.
Thanks, Christina. So next slide, please. The DC law, by comparison, is almost old news because it's been rolled out and all employer obligations and benefits are currently available, as you can see here in a timeline. And it was signed back in 2016, so it's been a long time coming to get to this point of being fully operational. Next slide. So the basics of DC paid family leave. You get 8 weeks of parental leave, 6 weeks for family leave, meaning leave related to serious health condition of family members, or 2 weeks of medical leave, meaning for your own serious health condition. There's an 8-week total cap, regardless of the number of qualifying events you have in a 52-week period.
But that 52-week period is not a calendar year basis or anything like that. It starts on the first payable date of a qualifying event. So if you take a parental leave, for example, the first date that you get paid by DC OPFL for that leave starts your 52-week period for this 8-week cap. The leave is in addition to ASLA, which is also a statutorily required leave in DC for short-term illnesses, routine medical care, and things of that nature. There's no separate job protection provisions here, unlike some of the other leaves, but there is an anti-retaliation provision, and it also includes an anti-interference element that will act in a practical matter as some level of protection. As you may be familiar with, the system is run similar to and in tandem with the unemployment insurance system in DC. And so the paid leave is funded through collection of payroll taxes. No employee deductions are permitted, and those payroll taxes are on total gross income. There's no limitation. Next slide. So the basic question is, does it apply to you and your employees? The answer is yes, if you have any employees, even one employee in DC. There are no exceptions under the law for small employers or for employers who offer their own paid leave programs or policies. There's also no private plan option, as you've heard mentioned in some of the other leaves, as an alternative to the government-run program. In looking at who's a covered employee and may be entitled to benefits, the law and regulations define covered employee with respect to time spent working in DC. However, a general rule of thumb that DOES continues to point to, and DOES is Department of Employment Services, who runs the paid family leave program in DC. The general rule of thumb that they will point you to is that if you're paying unemployment insurance tax on an employee in DC, that person is covered. So there's a rebuttable presumption if you're paying that tax. If you are paying the tax on an employee that you think should not be eligible for benefits based on the definition of time spent in DC, then you need to file a formal exception request with DOES, and if approved, notify the employee. For the purposes of the current pandemic times and teleworking being obviously very popular, if you have employees who are based in DC and are temporarily teleworking in Maryland and Virginia, for instance, as long as that's temporary and expected to end after the public health emergency, that does not change their coverage. They're still considered working in DC, assuming you're paying the unemployment tax on them, and they would be covered under the law. Next slide. Okay, next slide. So employer obligations primarily fall into 3 buckets for DC paid family leave, and that is wage reports and payroll taxes, posting and notice requirements, and record keeping requirements. The actual application and benefit determination process actually has a very limited role for employers. We'll talk about a little bit more how claims are filed with and paid directly by DOES, and there may be some requests for information from employers, and employers should coordinate how they want to work DC PFL benefits with their own employer-provided paid leave, but as a general matter, they don't have any role in actually approving the claims for PFL. Next slide. So I don't want to spend too much time on this since we are well past the first deadlines for wage reporting and paying taxes. Just a good reminder for everyone as to how this process works, and will be available for these when these slides are available. But I do want to remind people that there is a 10% penalty for failure to timely comply with wage reporting and payroll tax collection. Next slide. Posting and notice requirements does require, they're actually the same poster that can be used to post both physically in a work site and to distribute at the required times under the law. With telework, you obviously would be recommended to either distribute, which is one of the requirements for notice, or to post on any sort of intranet, the work site, or excuse me, the poster for the work site. Notice must be required at various points in time. Now that we're past the effective date, any new employees should be provided with a copy of the notice at the time of hire. Employees should be provided annually with a copy of the notice, and at the time the employer becomes aware that the employee may need PFL or has experienced a qualifying event. For the annual notice, I would point out that the original time period to have that distributed to all employees was had a deadline of February 1st, 2021. So if you have not gotten that out yet, then you probably want to do that in the next couple of days. The notice can be sent electronically, or less likely these days, but can be also delivered physically copied. But you want to have some acknowledgement that the employees have received it. That could be a read receipt from an email blast, but you do want to keep that because audit requests related to these records likely are going to seek confirmation that notice has been provided, and it is the employer's burden to prove that notice through signed receipts or read receipts for emails. Next slide. I don't want to spend too much time talking on record-keeping requirements because I know our time is tight here. I do want to draw your attention, however, to the fact, as I mentioned, that copies of required notices are part of the record-keeping requirements. The others predominantly are going to be coextensive with requirements under the FLSA or the FMLA related to wages, leaves, and things of that nature. But all of the records listed here, you want to make sure that you maintain for at least 3 years. Next slide. Okay, next slide. So benefits generally and how employers fit into this. As I mentioned before, eligibility and benefit award determinations are made by DOES. The employer is not involved. That means all documents and certifications are collected by DOES, and benefits are ultimately paid by DOES. You can revise policies to ensure that employers do not receive more than 100% income replacement in conjunction with getting PFL benefits and employer-provided leave. We'll talk about more of that in a minute. It does run concurrently with FMLA, DC FMLA by statute, and it also can run concurrently with employer-provided paid leave. That's at your election. As I mentioned before, there is an anti-retaliation provision that may operate as essentially de facto job protection, but that's administered by DC Office of Human Rights, and we have very little guidance as to how they're going to administer that at this point. Next slide. Okay, so I'm going to go ahead and skip this slide because of time constraints, but here it does lay out for you the timeline and what you can expect when your employees are filing for a PFL claim. And the 2 points I've highlighted here in color are points where the employer actually is either requested to provide information or gets information. Next slide. So the amount of benefit, excuse me, can you go back one slide? Sorry, thank you. The 2 points of contact I just mentioned, the employer communications, just highlights for you the information that DOES will expect you to provide as part of the claims process for your employees, and then also the notice that you expect to get from DOS once the determination has been made. I just want to draw your attention to the last bullet, which is the benefit amount. We'll talk about it in a minute, but if you're going to coordinate leaves, paid leaves that you provide with those provided by PFL, you're going to want employees to request that DOES provide the benefit amount. Next slide. And just to highlight here the amount of benefits and the maximum that you can have employees expecting to receive. Next slide. So these are the common issues we're seeing with coordination of benefits. As I said, you can modify policies to access employer-provided paid leave. Commonly, what we're seeing is people limiting the aggregate payment of benefits to 100% wage replacement. If you do that, just be careful not to encroach on ASLA or any other statutorily required leave and reducing the value of those. You can't reduce the value of that as an offset to PFL benefits. As I mentioned before, one of the options is running leave concurrently. You can also run it consecutively, and there's a lot of flexibility here in how you want to set up the policies. So there's no sort of one-size-fits-all because it depends on how your organization is set up, the employee population, what types of paid leaves you already provide, and what type of administrative capability that you have. Next slide. A few other considerations here that you want to draw your attention to as you're looking at what you might want to implement as a policy and how to wrap that around PFL benefits. We've heard a lot about intermittent leave today from a parental bonding leave perspective. I do want to point out that that can be taken intermittently under DC PFL, but it does not require employer approval. Now, it may not be job protected if it's not employer approved, but you could have a scenario where you have someone requesting bonding leave every Friday for 40 weeks. And again, just for current purposes, COVID, obviously of the moment topic, this is not a leave that's used for quarantining or anything like that. It is generally limited to positive COVID diagnosis, either for yourself or for a family member. But regardless, if you get information that one of your employees has that, has a diagnosis or suspects that they have COVID, that may be a qualifying event that you want to provide notice for. Next slide. Okay, and last were just some statistics I wanted to highlight. So you can see here, these were actually the most recent published statistics, even though they're a bit old. And parental leave is by far and away the most popular use of DCPFO. And now I'm going to turn it over to Renata for Washington State.
Great, and thanks, Chrissy. Everyone, this is Josh. I'm just going to jump in for 1 second just to read out the CLE code before we finish up with Washington State today. So the CLE code for today's presentation is SS, as in Seyfarth Shaw, 7692. Again, SS 7692. Thanks. All yours, Renata.
Thank you, Chrissy and Josh. So next slide, please. Washington paid family and medical leave has been well underway. Employers were supposed to begin collecting employee premiums effective January 1st of 2019, and benefits have been available for employees to use since January 1st of 2020. The Washington Paid Family and Medical Leave Law actually subsumed the state's prior Unpaid Family Leave Act. Next slide. The law has broad coverage for both employers and employees. I do want to point out that there's a very low threshold for hours worked, only 820 hours in a qualifying period. That works out to be just about 16 hours per week for an employee. And employers can be covered by this law both if they are based in Washington State or if they have employees who are working there, even if they are considered an out-of-state employer. Next slide. There are two types of leave an employee can take under this law, both family leave and medical leave, 12 weeks of each. However, there is an aggregate cap on those of 16 weeks total. As Christina mentioned with the Connecticut law, there is also, under the Washington law, that additional 2 weeks of medical leave available for an employee who experiences a serious health condition with a pregnancy. In terms of calculating the amount of leave, it is based on the typical work week for the employee, meaning the typical number of hours worked in a week over a period of 52 consecutive calendar weeks. And then for salaried employees, there's an assumption that this is 40 hours per week. There's a formula for calculating the amount of pay that's available. That's determined using the state average weekly wage as well as the employee's average weekly wage. For 2021, the maximum benefit is capped at $1,206 per week. Next slide, please. Covered reasons for use are fairly standard: medical leave, the employee's own serious health condition. That can include either inpatient care in a hospital, hospice, or residential medical care facility, or continuing treatment by a healthcare provider. And typically that's going to involve a period of incapacity of 3 or more calendar days. However, there are some exceptions to that 3-day rule, such as pregnancy or serious chronic health condition. Family leave, pretty standard reasons: family member's health condition, baby bonding, or qualifying exigency. For military families and family members include spouse, parent, child, grandchild, grandparent, or sibling. Next slide, please. This program is funded by a combination of employer and employee contributions. For 2021, it is 0.4% of the employee's gross wages, up to a maximum cap of the Social Security cap, $142,800 this year. Typically, employees pay 63.33%, and employers pay 36.67%. However, employers can choose to pay some or all of the employee premium. It is important to note that if you are paying some or all of that premium and you choose to stop or reduce the amount that you're paying, you do need to give your employees at least 1 pay period's notice. Next slide. Employers are required to remit premiums and submit reports on a quarterly basis. There's details available on the Washington Paid Family and Medical Leave website, paidleave.wa.gov, regarding those requirements. Next slide.
Notice and posting. There are some requirements to provide written notice to your employees. However, that does not go into play unless the employee is actually taking leave. And there's also a poster that you need to display in a prominent location. Both of those materials are also available on the state's website. Next slide, please. Reinstatement following leave is available for some, but not all of the employees who are eligible for taking leave under this program. The requirements for reinstatement are included on the slide. In the interest of time, I'll let you read those for yourselves. Next slide, please. Employers have the option to take a voluntary plan or a private plan in lieu of the state plan. However, it's important if you're going to do that you understand you are required to apply and receive approval from the state to do that. For the first 3 years, you have to have your plan approved every year, and then after those first 3 years, you only have to have the approval after a change is being made that's not mandated by changes to the state law. The plans, if you choose a voluntary plan, basically must be equivalent to what would be offered under the state plan. Next slide, please. Just to give a quick recap of what has happened during the first year of Washington paid family and medical leave, the state saw a higher than expected volume of claims at the beginning of 2020 that resulted in some delayed response times, processing times for the claims initially. However, their goal at this point is to keep the processing time to about 3 weeks. The state published some guidance regarding COVID-related claims. Notably, they have not waived the signed documentation requirement to support a claim for medical leave. An employee actually has to have the signed documentation from a healthcare provider, not just a positive COVID test. And there is no PFML for non-covered reasons such as quarantine or school closures. There is some rulemaking that is ongoing right now. There's a hearing scheduled for February 9th. There are a few rules that I wanted to appeals. There's been a proposed amendment to establish that an appeal will be withdrawn if a redetermination has been made with the aggrieved party's favor. Illegal acts, there's a definition proposed to determine what would disqualify someone from receiving benefits, and there's some clarification to the calculation of employer size for a new employer to Washington. You can read about all of the proposed rules on the website, and there's dial-in information for the hearing that's scheduled for February. I will turn it back over to Josh to wrap us up.
Great. Thanks so much, Renata, and everyone for joining us today. In case you're having any issues, questions with paid family leave, we just wanted to give you some resources that Seyfarth offers. We have a really comprehensive paid family leave survey, breaks down every state and local paid family medical leave law into about 35 different substantive topics, a lot of great information. There's an email here if you want to reach out with more information, any questions. And we also have a mailing list that you can sign up for. As we blog or put out legal alerts on updates, you'll get those in real time too. So just a couple of resources for you here. Thank you so much, everyone. Sorry for going a couple of minutes over, but as we said at the outset, really important topics, really detailed, really timely. Thanks again, and we look forward to seeing you at the next segment of our Paid Family Leave webinar series. Thanks, everyone.
This concludes today's webinar. Thank you for attending.